The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days at 11 o'clock till noon Eastern Time at 877-927-6648. And let's see, we've got the S&P. Why is it only at 9:30? All right. I thought I'd just do something for fun. You always like to do some different things. Oh, there it is. Okay, that's fine. Got a couple of changes there. All right, let's go to the market. And first of all, I want to thank John. I want to thank Tom. I want to thank Steve for 3 great hours. Let's hope that we can have another one right here. Very interesting session. Why? Last day of the month. Very interesting session. Why? Because it is one day before the last day of the week. There could be quite a difference. And if, in fact, we close down about minus 40 to minus 50 in the Dow and minus 5 or 6 in the S&P, and then lower on Friday and lower on Monday, that sets in place something very interesting. Aha. But we're not quite out of the woods. If you're a bear, there are a lot of bearish things going on, but you've also got to watch for the retracement because the Fed hasn't really changed policy. The policy is basically, it's failed when you think of how much money has been put in as far as the jobs are concerned, but that really wasn't the purpose. The purpose was to get the stock market to rally. They made it their purpose. They spoke about it. Bernanke said, we want people to feel good about their portfolios. It was a long time ago. They've succeeded dramatically. This is also a period where, remember I quoted the song that Frank Sinatra used to sing so well, riding high in April, shot down in May. What's the, that's life. That's life. And we've seen that before. We saw that back in 2011, riding on April, shot down in May, came back in June. And we're going to be seeing whether or not something like that unfolds here. I'll be doing a webinar this coming Tuesday night, catching up with what I did February the 19th. It'll be almost 3 months and a good period in which to see what's happened. The Dow has not made a new all-time high since March the 3rd. That is, in fact, 2 months. It's the longest time in ages that it hasn't been able to do that. There are a bunch of things going on. There are certain sectors that are now failing instead of being the leaders. And there are a couple of signs of life. But also what we're going to look at, and I'm going to run through them in a few minutes, are some stocks that are in their own way showing certain patterns. So let's do the numbers. Oh, and I've got something for my subscribers to my opening call. Tomorrow I'll show you, this is really interesting. I'm looking at, I thought that I was the one, very quietly, back in the mid-1980s, to start talking about skyscraper theory. And everything looked great. I mean, you've got all these skyscrapers that made tops and the Petronas Towers and all. And then all of a sudden, I read about somebody in the 1950s who had something that he called the skyscraper theory. Nothing's original. You think it is. But I never heard of the guy. I never even heard of that aspect because I'd done my study when I went through all those pages of the 1920s microfiche at the library, page by page of the New York Times. I couldn't believe how the 1929 period had the Rockefeller Center papers signed late summer of 1929, the papers for the world's tallest building, the Empire State Building, which couldn't have been done without Otis Elevator creating the type of elevator that can go that height to take people up in one line instead of having 3 or 4 banks of elevators. It was very, very important, or maybe 2 lines. But most importantly, the aspect of technology coming to a head to produce something. You've seen that in the Apple products. There's no way Apple could have done what they did in the beautiful artistic technology of putting things together unless they had the type of glass, Gorilla Glass or whatever it is, that was strong enough to be able to take the force for these particular instruments that they've produced. Microphones, you couldn't get a microphone tiny enough to be good enough. You couldn't get earphones. You couldn't get speakers. All of that had to come to a head. And that's what came to a head. And that's what we'll be talking about in my webinar that I'm going to show right here, if it comes up, right there. There's a 2-part webinar coming up by Steve Rhodes. It's going to be really interesting, something that if you're a trader or investor and you want to know how the thinking works, the machinations within the mind of how you can implement your trades and you can do it. Steve does a great job with that. So check it out. My webinar, my 2 free webinars, we had one on Tuesday, this past Tuesday night. All the things we discussed there have come about over the last couple of days. So it's absolutely relevant. It's relevant to what's going on. It's relevant to the chart formations you need to look at now that we're probably changing course and trend. It's very important. And not only that, you get that webinar plus my newsletter for a month. So the April 28th Essentials of the Chapman Wave. Very detailed. There's a lot of comments that I'm thrilled about from people who said, "Wow, thank you. I thought I knew this, the Chapman Wave, or I hadn't known anything about it, but what you introduced us to and what you developed as you showed the webinar and the fixed webinar, and then the free form where I take it live and we answer questions live with particular charts was very helpful." So I hope that could be of interest to you. But this webinar coming up on May the 5th, the 1929 Market Revisited, is that webinar that I gave. I had a lot of comments from it from February the 19th. The trade we put on very soon after that, using a short position, is still in that position and is only down just 25 cents or something like that, 30 cents. And it has held all this time, even though it's a short position on an index. And what I had done with that is I said for new subscribers, and I made a big deal about this, and for people who had never shorted before, this was a way to introduce you to the art of shorting, to be able to have some kind of control over your portfolio, to maybe think of it as insurance or as a trade or whatever, and start small, treat it as an experiment, treat it as something that you're going to learn from. It's your education. It costs you $100 or so bucks, whatever it is. It's not a big deal because it's part of the learning process. Okay? Now, the question I have in the den, and I'll get to it in a moment. Good question. Claw asked the question above, should I be selling my electric utility stock, paying 7% yield? What say you? That's the XLU. And let me get to that. Let me run the numbers here, because the patterns that we're looking at, those arch formations, the cup formations, they're all forming just as we want on plan. So let me do this. Let me just take this away because it's just blocking out the view of some things. All right. So the Dow right now, where did it disappear to? The Dow, what I want you to talk about is that for my subscribers tomorrow, I'll show you something here in Boston. Remember, the reason why I brought up the skyscraper theory is that I'm waiting for something to tell us that there's a major top in the market. I mean a major top. This is more an intermediate to a longer term top. I'm not talking about a 1929 crash. I'm talking about some of those elements within that really taking a hit. How it unfolds, who can tell? I mean, we've got a different policy now with the Fed, completely different to the 1929, where there was no assurance or guarantees, no Social Security. There was nothing there to support people. So we don't know how this will unfold. But this is very interesting. Want to buy into a high rise here's your chance. I never thought of that. I thought there might have been something like that in the Rockefeller Center or Empire State Building in New York at some point, but this is using the building as an IPO to trade the building, I believe. I'll check it out later on, but I'll show it tomorrow for my subscribers. All right, so here we go. The numbers, please. Let me just check. Is it there? Have I got it? No. Okay, so we'll use the numbers here. The Dow is down 60 at 17,975. It was down a little deeper early this morning, but it's coming back a little bit. This is, after all, the end of the month. You'd expect some kind of buying to come in. The S&P is down 770 at 2099. Comp index is down 32 at 4980. I'll show the chart. I've got it all written down. Apple, a whole bunch of things we're going to look at. Gold. Gold is down. The GLD is down over 2 points at 113.31. Gold itself is down $30 out of the blue at 11.79. Silver is at 15.94, down 75 cents. High-grade copper's pulled back. It's actually now it's unchanged after being up quite nicely. You've got copper. Well, bonds, first of all, bonds are down at almost $1.50. 1 and 11/30 seconds. The TLT is down 75 cents at 124.96. Now, this is going to be very important. The dollar. The dollar had a sharp pullback, if I can find it right here. Dollar. DXY. Dollar is trying to form a little bit of a base here in the 120-minute chart, but it's had a very sharp move. It breaks that 95.30s, 95.50 support I spoke about. Today's low is 94.40. This is a pretty big move in the dollar. Let me move this 120-minute chart. You see, you've got that U formation. You can have 1-to-1 to the downside. We've already got the 1-to-1 the way I calculated from the top to that bottom to the bounce high failure pattern down. It's a little bit more extended. So this is going to be very important. Why? Because my contention has been that the Fed probably wants to see more of a dollar decline than a bond decline. And yet what we've got, look at this, the TBT, which is the inversion of the TLT. It's the ultra short Lehman 20-year T-bond Treasury fund. I think it's an ETF. I think it's called an ETF or a fund. Look at that. It's gone to the gap in a leg D with a doji candle. MACD's good. Stochastic's 85%. And it's got the Chapman wave inside wedge stuck right in that pellet line. But it is 2 days beyond the. You remember yesterday I was talking about the fulcrum, that right there. The plumb line, the line that makes the low or the high, that creates the arch low, the arch high or the cup low, and then you can have, as you have in the S&P, the SPY, 21 days up. 21 days down, and then 21 days up to peak E, and now we've absolutely confirmed the peak E. So let me talk about this pattern when we get back, and I will go to the XLU during the break. I believe I need to update it. Maybe not. Let me just see. We'll be right back. Basil Chapman, Tiger Technicians Hour, XLU's at 44.10, down 64. I'll talk about it when we get back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I've got a ton of stuff to do. So this segment, I'd like very much just to stick with that, and I'll take calls just a little later in the show. Let me just do this. I also had a couple of emails I want to answer. So here we go. AVG, we in the den, we have such wonderful traders, folks, and long-term position players as well. It was mentioned just the other day, AVG, a stock I hadn't looked at, so I did a quick notation. It had gone to a peak C in the weekly, a peak B in the monthly, and I kind of forgot about it, AVG technology, but I do remember distinctly talking about at some point or showing the chart of this down, a longer term in the daily down move that was just a concerted kind of a channel which did expand to the Chapman Wave falling axe formation. But at the same time, what happened was, and I even had a little circle in there as a target. So I haven't looked at it now for maybe a month. Well, it continued down, and it went to what? It went to 20.67 AVG Technologies, and all of a sudden I got a note saying, hey, look at AVG, and it's in leg C. Yeah, what the comment was, good morning, check out AVG, Chapman Wave Booyah. Well, this is at leg C, huge 10%, 11% move up 2.37 in the daily, finally broke out of that pattern, and a leg D up in one swoop in the weekly chart, and is trying to tackle the 26.56. That's what I was saying a little early on. A very interesting market, because a majority of the stocks that I look at are looking very weak, but there are a couple that just showed tremendous resiliency. Taser was one of those. And then when I got back from Australia in October, I said, the minute I get back, we got to buy Taser. It's just fitting this environment around the world that we're looking at of trying to how do you treat violent situations, and I never did, or we tried it and we maybe took a 50-cent gain or 50-cent loss, and I never got back because it just kept moving. And today, I don't know if it went to a record high, but it had very good earnings. So there are some stocks that are doing well. Yes, this is looking very good. You got tremendous support now at 23.50 to 23. If this is a legitimate breakout, and leg D in the weekly says, okay, you've got to be a little bit careful, but that monthly chart is still looking very good, even if it now took another little period of time out. Apple was number one stock that I wanted to look at. I showed that the other day. I can't remember if I did it in my webinar or if I did it the next day on the show. I think I did it on the webinar, but I mentioned it to Tom on the very day that the news came out, and I said, Tom, this is leg D, and I was going to do that, whatever it is. I showed it as a cup formation, hitting the Chapman wave inside wedge target line in a left side, right side price match to that low right there, and it did it perfectly, and it went to 134.54, just a tad, less than a point above the previous high, which had 133 round number close. And that to me says 133 is the number to watch on Apple. If it doesn't do that in the next week, it's going quite a bit lower already. The move in the cup formation, this is the chapter in my newsletter, if I can just find it right here. I spent some time today discussing this particular pattern. Of course, I've got to find it. Here we go. Right there's a snag it. There it is. Okay. No, it's not that, so it must be this. Right there. There it is. Okay. Oh, of course, that's the one that I've got for tomorrow's already. I've got tomorrow. So there's a technique. Chapter 22 is a chapter in my book, my CD book called Introducing the Chapman Wave Methodology, only available at TFNN. Chapter 22 talks about the drop bucket formation. So what is the drop bucket formation? It's a little catchphrase I gave it because it looks like a backhoe that picks up the trash and then opens the bucket and kaplop. Now what we've got is a situation, the situation in this particular form that says if you take out 1/3 to 1/5 to 1/2 of the lip down to the base of the cup in the move that went to a peak D in a cup and ladle potential breakout of this left side, right side price time match, be careful because you could very quickly test the low. That would be the test of 122.60. So we'll go one step at a time. Why? Because if Apple closes, it's down 2.25 right now at 126.40. If it closes underneath into, I would say, into the 120.50 to 119.80 area, you could get a 1-to-1 to the downside. That's why this is a potent technique. There it is in the weekly chart, and it says 123.70. I think it is. Let me double check. 570 is the 9-period exponential moving average. Watch out if it's for the first time since it broke out on the week of the 23rd of January. If Apple closes underneath, that would be a very big negative. So that's the scenario there. I want you to show the SPY with the 21 days down and 21 days up. It's the same thing. This is a very critical support area. I'll be back. Basil Chapman, Tiger Traditions Hour. We'll look at Disney, Yelp, CNC, and CI when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back, and if I can remember what I am right there, let me go back to the SPY. So I got a little nervous this morning because I heard on CNBC two people. One gave a very cogent review of the markets, etc., and has been very accurate. And he said, I was working at the same time, so I'm always with one ear with a soft background voice and focused on my work. I heard say something about an 8% correction. So I'm saying to myself, okay, that's 1%. But then immediately afterwards, I thought I heard someone else say, yeah, correction. So they said to me, oh, man, are we going to see a rally first before we correct? But I think that the momentum of the downside of the biotech sector, which I should just for clarification, we are short from my opening call. The sell signals that I've been getting, everything, the bias in my newsletter is all to the short side. And I've done it purely technically. It hasn't been done on news or anything like that. So all I can say is I'm going to just have to stick with those technicals. We still haven't got the VIX running very sharply, accompanied by bad news that impacts the market negatively every day. But this is the critical day going into Tuesday, and I'll explain why. Because once the tide has changed and you're starting to see the move to the downside, every piece of news, whether it's good or bad, is treated as bad news. Every rally is treated as a time to sell and to short. And you start to see, instead of higher highs and higher lows intraday going to new highs, you start to see lower lows and lower highs going to lower lows. And this is where you start to get reports about crazy things that are happening. For instance, like this IPO of a new skyscraper in Boston. Boston skyscrapers, all I'm hearing now, skyscrapers. Before it was anathema. They had like one building every 15 or 20 years or 30 years that broke records, and that was it. That was it for almost a generation. So this is something we got half a dozen skyscrapers planned. Skyscrapers in Boston. These are not New York skyscrapers, but for Boston, these are really tall buildings. So we're going to watch this really closely. In the webinar that I'm giving a week from Tuesday night, this coming May the 5th, I will be talking about the types of buildings, the type of technology, the type of mood that would accompany this, and the chance that we start to get and the way news media starts to filter. Now I pick up on words, and then I'll hear one word, and it'll stay with me. And I won't hear that word again for maybe a year, maybe 2 years. And then I'll hear it again, and I'll say, aha, second time. And then I'll wait for the increase, the speed with which that word keeps repeating. Now what we're hearing is that there's a gap in the millennials who are not investing in the long term. That is the key. When the millennials start to invest, that's going to be the trigger for me to start looking intently at where the market is and what's going on. Why? Because they're sheep. Now, I don't say that in a negative way. I say that in the way that look at all these millennials and many other people as well who keep talking about the environment and keep talking about health food, and they're doing all these exercises. The gyms are full, and yet the drinking for women has gone up 37% or something in the last year. Smoking of those e-products is skyrocketing. In Boston alone, over 1,000 deaths from heroin and other forms of drugs. So there's this dichotomy. You pick up on a word and it becomes, we call it politically correct, but it's just the correct word. In other words, if you're in a crowd and you just shout out the wrong word, even if it means something else, people will just glare at you because it's the wrong word. Nobody says that word, whatever the word is. But there are other words that are now totally acceptable that in other periods were just totally unacceptable. And that's what I follow. And this is the change is coming. And the change is going to come when you least expect it. Well, some people least expect it. Some people are always a little bit ahead of their time, and then have to wait for things to unfold. So the SPY's got 21 days down and 21 days up in a perfect, exact plumb line low of the 26th of March at 204.12. This is the SPDR S&P 500 ETF that you can trade like the index itself. It goes up what in the Chapman wave. You always want to go to a P, D, or E, and you want D's where certain things can happen. When it spikes up to E, hits that Chapman wave inside wedge trend line exactly in 21 days, pulls back quite sharply from the 212.40 level to today's low of 208.92. Okay. Now we're going to see what happens because it's underneath the 9-period exponential moving average. Have we seen a change in trend? That's what we're going to be looking at. Millennials is those people born, those people who are the ones that crossed that millennial 2000, the year 2000, and they were at that point, they were in their 18, 1920s. So now they're in their whatever it is, 30s, early to mid 30s. So now let's look. That was a question in the deck. So let me go on with this for a moment. So I had a question from, was it Anita? Let me just double check. Anita asked about Apple, cup and handle on Apple. Well, this is the potential for a cup and handle, one of my least favorite patterns. Not least favorite pattern in the sense that I say it's a bad pattern. It's just a pattern that's very hard to trade. You don't know if it's going to be a cup and handle, number one. Number two is that I love the Chapman wave cup and ladle that spirals right through the left side lip. That's clear. this is always fuzzy because the moment it gives you a confirmation that it's broken the handle by going above the lip, in this case 212.40, whatever it is, all of a sudden you're looking at maybe it's toppy, and invariably the handle of the cup and handle comes back and retests. I don't like this formation. It has the same characteristic as a head and shoulders, in this case, inverted head and shoulders. By the time you recognize it, you must use other techniques to recognize it earlier, because by the time you recognize it, a chunk of the move has been done. It's like those people who trade using the MACD histogram. That's what I discussed the other night in my webinar. That 0% line, by the time you get there, you pretty much, you could be done. Look there, you got across the 0% line right there. The S&P was at 208 to 210. And all you've got left is to 212, and then it pulls back. Where's it today? 210 is back there. In fact, it hit the 209 level. So it's not one of my favorite techniques. But you can use it, but you use it in a different way. So this is the potential for a cup and handle. Look, Apple has something a bit different. Look, Apple is not, it's a Chapman wave drop bucket formation. Look at this. I'll squeeze it closed. There it is. There's the long handle. I don't want to get the CD right now. I've got enough up. It might mess things up. So you've got that long handle going up, and then you've got the cup formation, the drop bucket, backhoe, arm goes up, bucket, and plop, it lets it go, and bam, you come down. And that's what I'm looking at. I think Apple has a problem in the short to maybe intermediate term. If you've got it as a very long-term buy and hold, hey, it is a fantastic company. It just needs to digest these huge gains over the past year and a half to 2 years. There's just no question. From 55 to 134, that's a pretty big move. Okay, so that's that. Now, let me show you something. Disney, I showed my subscribers the other day. We have no trade in Disney. Why? Because like Apple, Disney is a core. If you've got this as a core holding, a long time ago, maybe 6 months, I said, I've done this every year. I've looked at what we would like as a core position, but I don't always get those core positions. It's a pity. I think the next pullback, I'm hoping to set up for a core set of 4 to 5 core positions. In this case, I spoke about Disney, spoke about Taser, spoke about General Motors. That would have been one that didn't succeed. Well, it would be up a little bit, but not really succeed in the way. But that's would be a long-term buy and hold. These are not stocks we own at the moment. Taser, Disney, GM, Apple was one. Google was another. These are just long-term buy and holds. So I have to, and Dunkin' Donuts. And there were maybe 1 or 2 others, and I just can't remember them offhand. But it was like a portfolio of the longer term where you don't have to worry about intraday stuff. Okay, now let's get back to our story. So Disney is in peak E, made a high of 111.66. I'm looking to see if it was surrounded by round numbers. No, 111.66, trading at 108.97. There's almost like a cup and handle breakout, cup and ladle breakout. Now we're going to see it come and retest the 108.94 high, peak C at on the 20th of March. If it closes underneath that, you've got to be looking at 106.50 as a potential for the weekly, and you can see this weekly has the potential here to create some kind of a cup and handle. But this is the summertime. This should be a good season for Disney. So I'm looking at this and I'm saying, what is it telling me? I don't want to make decisions yet. I don't even know if there's a peak. I have to wait for the whole of May before I know if there's a peak E in the monthly chart. So far it's fantastic. I'm looking at it as more a shorter term to intermediate term watch stock, because it has, well, actually, Apple should be the watch stock, right? Anyway, so Disney, in fact, is the stock to be watching, because it might be making a little bit of a problem here, which says, gee, the summer might be a little disappointing. I don't know. We'll see. So in the meantime, I wanted to show the chart because patterns repeat and we can see them right here. I said I'd look at Yelp, and I have to apologize to one of my subscribers. He asked about Yelp the other day. It was moving up, and I said, it's moving up okay here. I can't remember if I said to him, be a little careful. He said earnings are coming out. I can't remember if I said be careful for earnings, but I didn't follow up. And when I saw it intraday yesterday, I said, oh, no, I forgot all about Yelp. because it's in a possible peak F right here. And if it pulls back, it went to a high of 52.51, had a lower high the next day. I didn't have it as an alternate count at that point. And look at this, the monthly chart. What a sharp pullback. A, B, C minuses always say, be careful, you could retest the low. And yeah, it is now underneath the 9 EMA. So this is a good trader, a good position player. I'm sure he handled it very well. But I'm so sorry. I would have said to you, take a chunk off, regardless if it moves up, because you don't want to be there if it really is a peak F. And I apologize for not doing that. Well, yeah, Yelp in the den. Wow, at Yelp. So Jane, I want you to know about Twitter. Twitter also, same thing. It went to a peak E in the weekly. It failed at the left side, right side price time match. It went to a peak E and failed. This is a real problem. I think Twitter has a real problem. Peak C minus in the retracement, in the cup formation. Look at that. It just missed the left side, right side price time match. And 55.99 was the peak D high. I'd be careful with these stocks, especially in this environment right now. You're going to see these stocks. Akamai, I mentioned that. I showed it on my during my show. It was part of what I'd been preparing. The 120-minute chart, I prepared it for a different reason, to show the instant restart of the Chapman wave. At the time, I said that it's gone to, I even put the down arrow in, saying that it's gone to a D. And lo and behold, earnings come out and it plummets. There are a lot of stocks that are looking very weak, and they are sometimes core positions for fund managers. So just be a little careful here on the upside. We are mostly short the Dow in many ways. We're short. We are long the at this point we're still long the volatility index, and we've got a number of shorts. We short different sectors. One of the sectors is giving huge gains at this particular point. One is just starting to give us very nice gains. Days young, end of month buying could change all that. I don't know, but these are positions we had based on the technique that we use, and that's just the only thing I can do. So now that was it. CNC. Look at this. We had this as a short. Wrong. 69.60. I didn't even know about CNC. I hit it by mistake on the computer. I was looking for something else. Anyway, I hit CNC, Centene Core. It's a government. I read this. I said, government-sponsored program in healthcare area under and non-insured patients is a real problem in that area right now. So I said, give it as a short, and this was on the 16th. Wrong. It went down the next day and then it moved up high. We only took a 1.4% loss on that. But look what happened. It had that Chapman wave rogue wave to the upside, goes to 74.26, and now it's at 63.68. I wish I'd seen it as a turn, because look at the 120-minute chart. It gave a perfect peak E reversal. I just didn't see it. Sorry, I subscribed. What a nice option this would have been. Well, coulda, woulda, shoulda. Huh? So yeah, we are CNC, and I want you to look at CI. Comes out with earnings today, and wait a minute, 135 round number high to peak G, same thing, rogue wave, and it does a turnaround, gaps down the next day. Peak F, I haven't got it as a peak F confirmed yet in the weekly, because I need the MACD to go negative and the stochastic to go under 80%. So the weekly is still looking very good technically, not price-wise. This is the opposite of what we've seen lately. We've seen the technicals deteriorate, yet the price of whatever it is we're following has been holding very well. But wait a minute, that monthly is in G/B. We've now, for the first time in a long time, seen G's at top. So I'm going to be watching Cigna, Core, CI at 126.69, up a penny after pretty good earnings, I believe. I'll be back. Basil Chapman, Target Conditions Hour. Last thing, if you want to give a call, I'd love to take a call.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Wow, should be a fabulous show with Larry today because gold. I'm dying to hear what Larry says, but let me just show you something here. Remember the Chapman wave, the idea is to identify the lowest low bar, merely count each successively higher peak, peak A, peak B, peak C, peak D, and that's where other things can happen. Doesn't mean to say you have to get out of the trade. Doesn't mean to say that you can't go higher. It does mean to say that that's where you can recycle to a very powerful move that can go to another 4 legs up. That's projecting really fabulously. Or it says be very careful, because this is where you can have your deepest decline. So I bring this up for what reason? For a very simple reason. GDX. Remember we had a call, was it Suzanne? I think it was Suzanne from Canada. I think it was Suzanne from Canada, who was using the Chapman wave methodology for my CD book. And what happened was we were right here, and I said if the GDX does a certain number of things, if it can get to 20 trying to remember. I think I said 20.35 to 20.60. There's a real good chance it's going to at least attempt to get to the 21.08 level in leg D. And that was the question. We're at peak C. Would we make a D? And I said there's a one-to-one relationship in the chart wave called the falling axe formation. That is in my CD. That is a chapter, I believe, chapter 24, and we talk about that. And what does it do? It shows. Oh, we're already drawn in. It shows you that there could be a one-to-one with the breakout, and if there is a one-to-one, that at least targets the 20.50s. That's why I thought we would get the leg D. Well, we got the leg D, but what do you expect at peak D? That's where you got to be a little bit careful. What happened to the GDX today? Down 55 cents to probably make a peak D. The MACD, the moving average convergence divergence, is still good. The stochastic is not that good. It's at 80%. It really should be higher at this point. So if there is a rebound in gold and the gold is able to go next week by Tuesday, gold itself trading at now, this is a different formation altogether, but what you do need is not for gold to break down to go under 1170 to create the pattern that I've been talking about for I don't know how many months. It's getting boring already. I already drew it in, the arch to lowercase h to lowercase m formation. You want to see gold trading above 1195 to 1204, and then push the MACD and the stochastic in the weekly chart higher, so it shows it's got the momentum to really take out that very tiny peak from A to B at 1224.50. Okay, so that's gold. A dollar is the exact opposite. So I don't want to take time right now because I'm going to be back with Tom a little later on in the day for an interview. I just wanted to say the dollar is attempting to have a little bit of a bounce here. If it fails, then the next level of support for the dollar is the 94, right there, that candle, 94.70 to 93.80. So we're going to watch this real closely. Let me just wrap up here before we go to my final break, and then Larry comes on. Perfect timing for Larry, I'm sure. Look, the VIX is in leg A in the daily chart. That's nothing. We've seen this so many times, and it fails at an A minus and comes back, makes a lower low. Aha. But what's different, and I spoke about this the other day, the reason why we're in this position is because, in the long position on the volatility index, is because this time there was a more positive divergence as the pullback occurred, number one. Number two, the weekly chart is for the very first time showing that 9-period exponential moving average right at 1411, where we are now, is starting to show signs of being a magnet, but will become a propellant to the upside rather than a repellent if all of a sudden the stochastic, which is horrible at 8.99%, can next week by Tuesday or Wednesday can break into the teens, break above 9% into the 12 to 13%. It's still way under the 20%, so this is just the start. Now watch that IBB. The IBB is that's a complete retracement. If the IBB breaks 334, that's very negative. Have a great day. I'll be back tomorrow, and I'll be back with Tom later on. Stay tuned for Larry Pizzavento. Have a great day. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.